It's a company called Cannara Biotech, based out of Montreal, Quebec. Current share price 57 cents. Market cap's 50 million. Shares outstanding are 90 million. But daily trading volume only $2,800 on average per day. So why do you think this company is going unnoticed, and why, in return, has it grabbed your attention?
I think a lot of cannabis companies in Canada, people aren't interested in looking at because it had a huge run up and it's come down. So I think that's part of the reason that it's down. And also, Canada is a very competitive area for a cannabis company to be in.
Very.
But this is in it. I thought, this is quite interesting. It took. I hadn't followed this company that much before,
I
and it
haven't either.
surprised me. Yeah, when I started to look at what they're actually doing, they're based in Montreal, Quebec. They have two mega facilities in Quebec, over 1.6 million feet of growing area. If you're not familiar with that number, that's like 10 Walmart super centers of indoor growing. But they have interesting distribution. They're a multi-provincial operator, I guess we would call it. They're in Quebec, Ontario, Saskatchewan, Alberta, BC, and Manitoba, and they're increasing that distribution. So I wanted to step back and learn more about this company.
So when we look at the total addressable market in the Canadian cannabis landscape, I think it's supposed to hit a little over 5 billion US this year, is it not?
Yeah, we can pretty well call it California, and
Okay,
the population in Canada is similar to California, and it shares a lot of similarities. It's a very competitive market.
extremely.
So the CAGR going forward in growth is only 3.17% in Canada.
Yep.
So you have to be a company that has better execution and price efficiency compared to your peers to do well. So that's what we'll be looking at when we look at this company.
And that's putting it mildly when you think about
Yeah.
the Canadian cannabis landscape. A lot of things we learned, obviously, 6, 7 years ago, but we actually interviewed the CEO of Tilray Brands, Irwin Simon, this week. And one of the things I learned about them is they're just not a Canadian LP anymore. They're actually a lifestyle company. They've gone into beverage, they've gone into all kinds of various things, which you really have to, I think, during these times, especially if legalization in the US is still years out. But interesting story to say the least regarding this company. So saying that, let's go to the charts. What did the revenue from last year show, along with their growth over that same time period?
So this revenue is significant. In the last 12 months, they had $76 million of revenue. But look at this growth. Remember, the CAGR of the industry is growing around 3%. Last year, they were 51. 3 years, 181. 5 years, 131. This company is growing.
So why
Uh,
does no one know about this company? That's crazy.
Yeah, I don't know. It was something that I was excited to learn about, and I think our audience is going to be interested. The
Yeah.
gross margins, Canada is more competitive. They're not going to get to that 50%
Yeah.
number
Yeah.
that we look for in the US. It's 37.9, but their SG&A is under control. It's only 23.5. So they're very careful in the amount that they're spending to create this brand, even though they're across so many provinces. They had an EBITDA of 14.3
I
million
was just
and
going to say that.
real net income of 5.3.
Don't see a lot of EBITDA at this early stage of the game in the cannabis space. There's few, but
Oh,
not many.
yeah.
All right, let's look at their balance sheet. What's their current assets, and do they have what's their working capital currently look like?
Yeah, so their current assets compared to liabilities, current assets was 62 million. The current liabilities was 26, so it brought their working capital at 36. So that's pretty close to their
Yeah.
market cap of 50 million. And they have a breakup value of 81 million that's already been depreciated in value. So that's a very conservative balance sheet that they have.
All right, levered free cash flow. And one final number to review when it comes to expansion. What's their capex look like?
Yeah, so they have 1.5 million of leverage free cash flow. The capex here is 8.7 million. When you compare that to the market cap of $50 million,
Yeah,
they're reinvesting
big
heavily
time.
in this business.
Yep.
So imagine what that's going to do to the future revenue that they're plowing it all back into the business. So this was very interesting to look at.
Okay. So, moment of truth. Would you own the stock?
Absolutely. You can buy it at less than
Okay.
its breakup value. It's not bleeding. It has excess cash flow, and the cash flows tax efficiently being driven back into the business. This is a story to watch for sure.
It's a cannabis company here on the show. They're out of Quebec. It's called MTL Cannabis Corp. We actually did a story on them highlighting some of their recent earnings, which were dynamite. They're based out of Montreal. They're led by CEO Michael Perrin, who was involved in the cannabis space in the early days, then left, took a hiatus, then came back, and now he's running MTL Cannabis, and appears that he's got this thing heading in the right direction. So, Bill, tell us more on what they're building in both Canada and internationally.
Well, this is where I became really interested in the company. First of all, to be frank, I hadn't heard of the company before they had
Me,
these fantastic earnings.
neither.
Yeah, and so that was great to learn about something new. And so they're really focused one on the Canadian medical market, which
Yep.
sometimes you kind of think, well, if cannabis is legal in Canada, why is there still a focus on medical use? Well, it's because a lot of people they want to take a medical approach to it. There's also insurance as well. So this is a focus of theirs. But also they have an international expansion operations. They're working with expansion plans and also have exports now. Germany, Australia, Poland, Portugal, United
Wow.
Kingdom. So this
Yeah.
was something that was quite interesting.
So I'm just looking at this as well. They have a facility, 57,000 square feet. This is up in Quebec. Do you know much about that facility at all?
That's a large facility, but also
Decent
they
size.
want to do things that are very environmentally friendly as well with a focus, and that's something they present to their buyers of their end products as well.
Okay, some of the numbers. They trade on the CSC under the ticker symbol MTLC. Current share price 21 cents, market cap 25 million, shares outstanding 117 million. However, daily volume is only 2,500. So we've spoken to this company recently, Bill, and it was outlined to us that the management's first priority was to get the company operating in the right direction, which appears that they've done, followed by housekeeping to bring attention to the daily trading volume. When we look at this company, the numbers really stand out. Market cap, as I said, 25 million, yet they did $65 million in revenue over the last year, with growth as much as 165% during that time period. Gross margin was a whopping 49.9%. So what are people missing here?
Yeah, I was really impressed with this because we've all heard of Aurora Cannabis, and they have about 25% of the revenue of Aurora. So I was really surprised with that revenue growth and those margins because Canada is very competitive. But this strategy they have that's also involving medical and also involving the international expansion is working. And that's also why their SG&A is very reasonable at 27.3%. And so this is something that has legs on it. And with this work and these margins that they have here, they had real net income of 2.5 million, EBITDA of 7.3. This was a real surprise to see how well this company was doing and under the
Yeah.
radar.
Yeah, no kidding. Let's take a look now at their levered free cash flow along with CapEx. What did you find?
So they have 10.5 million in leverage free cash flow in the last 12 months. So they've done well, very well. But they have capital expenditures at 3.3. So they're pushing this back into the business, and this is going to lead, potentially to additional revenues as well. So this looks like something really interesting to be taking a look at.
Do we know what their working capital is? What'd you find?
Well, this is one thing. This was a bit of a yellow flag. They had working capital that's negative, but they've turned so positively into the free cash flow. And I think this is managed because they're still investing into capital expenditures.
Yep.
Working capital works itself out if you have positive cash flow as a business. So this was something that I took note of. This could be part of the reason that maybe the stock has come down a bit, but it's something that wasn't overly concerning to me compared to if the company had negative cash flow.
Yeah. Well, what cannabis company has not been hit hard right now? But at the end of the day, it's all about positive net income, which eventually I think a lot of companies hope to turn the space or turn the corner, I should say, with rescheduling in the U.S. And as much as they're operating in Canada, it just appears that everything in the U.S. is going to have an effect on the overall industry. But all signs point in the right direction. Again, 65 million in revenue, and growth was 165% over the last 12 months. Moment of truth time. Would you own this stock?
Yeah, absolutely. You're buying something at three times cash flow, and it's growing. The cash flow is going to be growing if you're increasing the revenue like that, and they have healthy margins. This to me just seemed like a no-brainer to pick up.
It's in a company called Avicanna, trades on the TSX Venture under the ticker symbol AVCN, and on the OTC under the ticker symbol AVCNF. Current share price 29 cents, market cap is 34 million, and shares outstanding are 109.3 million. but daily trading volume, it looks like, is a ghost town, only 9,500. So first up, what does this company do, and why, I should say, how does it grab your attention?
Yeah, so this is a cannabis company in Canada. They also
Yep.
offer services. What's interesting here is they're very focused on the medical market, and they have a very interesting a strategic arrangement with a partnership with a group called Shoppers Drug Mart in Canada, which would be the largest drugstore. It's similar to a Walgreens, larger for their footprint
Huge.
in Canada. And so this was very interesting. It caught my attention. Again, I wasn't as familiar with them until I came through my research and I found them starting to look at some numbers. And so I said, well, let's dig more and find out some more.
All right. So they have established partnerships. And like you said, Shoppers Drug Mart, I think a lot of people understand in this cannabis space. I remember going back to the early days of Afria when they announced a partnership with Shoppers Drug Mart, and that made the stock rip. But like all cannabis companies, this stock has been hit hard. So could you see as far as this company like this changing based on what they're doing recently?
What I saw was interesting. Besides, we were going to look at the financials. It made me think again, as along with our first company, MTL, about how important the medical market is long term, and how that stays even when countries like Canada have legalization. And
Right.
imagine if you're someone 60 years of age, you're unfamiliar with cannabis, you did reading, you're not going to a dispensary to buy a gummy. Instead, you want to seek advice from the medical community for this. And so this is still a very important part. They have the
Good point.
partnerships. So I said, this is something, let's look at the financials a little further to see how they're doing.
Okay, let's go to the charts now. What did you find as far as revenue last year along with growth percentage?
Revenue is flying. They had revenue growth last 12
Wow.
months of 427%. 3 years is
Wow.
120, and 5 years is 169. Again, with the medical, it's decent. They have 41% gross margin, so they're moving in the right direction. They still had some negative EBITDA of minus 6 million, but this is a company that really has a tremendous growth curve.
Yeah, well, what I'm seeing more as a common theme, I'm learning more and more about the Canadian market, and it's not what people I think necessarily think. There's some real companies that have really lasered in on execution and efficiency, which is extremely important in a highly competitive market. But the perception of the Canadian cannabis market is look, there's a lot of companies that aren't around anymore, but for those that are, like you said in an earlier podcast, that efficiency and execution is going to be extremely important, which this company so far looks like it's demonstrating. Okay, so gross margin reported what along with SG&A and EBITDA for the company?
Yeah. So the gross margin is 41%. They had SG&A spending, and they're still spending heavily back into this revenue growth. It's around
Yeah.
69%, and so they had negative EBIT of minus 6.4. But we'll look a little bit closer when we look at the balance sheet and the cash flow statement there.
Okay, and what are we finding when it comes to that?
The balance sheet, they have, again, they have a yellow flag here of some negative working capital. But when
Okay.
I look at the next chart on the cash flow, they've turned the corner this year. In the last 12 months, they had positive leverage free cash flow of almost $1 million.
Okay.
So that's still a yellow flag. This company is not out of the woods yet. But any company that is forgetting about, no longer has a burn and is moving positive cash flow, it becomes a new life or a new time in that company cycle.
All part of a growing industry, that's for sure. Okay, levered free cash flow again showed what?
Almost $1 million in the last 12 months. Not
Yeah.
that significant, but it's positive. And that's going in the right direction with a company with such high revenue growth.
Okay, moment of truth. Would you own the stock?
I would buy that. I'm very interested in long term globally the medical growth of cannabis, and even with different rule changes that support recreational use, I still think there's a very good opportunity for execution in the medical market.
Cannabis company called Ayurcann Holdings trades on the CSC under the ticker symbol AYUR. Current share price 60 cents. Market cap is 11.6 million. Shares outstanding are 195 million, and daily trading volume is like pretty much non-existing at 2,000. Bill, people love the cannabis industry, but I'll be honest, I've never heard of this company before. So who are they?
Well, this is a trend. We've been looking at some new names, and
Yeah.
we've been surprised what we found in the last 4 weeks or something. So this continues. This is a multi-provincial operator. I was surprised at um, how much penetration they had in the Canadian market. They
Okay.
have, for example, 1,600 retail locations in Ontario carry their products. Alberta, 750 retail stores.
It's impressive.
So they really have distribution across the Canadian marketplace. And so we've been looking at these names, looking deeper to find out how their finances are and if there's substance there. And so I said, well, this looks like a name that we should go through.
Well, gone are the glory days of companies listed on the CSC and having a lot of success, but you're starting to see more and more companies become listed on the TSX along with SIBO Canada. And I wonder if that has some concerns as well. And at one time, the CSC was kind of like the cannabis stock exchange, but those times have quickly changed. But what exactly is going on as far as this low volume? Like, why are people just not aware? What are they missing here?
Well, we just heard about it.
Yeah,
We
exactly.
cover the space a lot, right?
That's a very good point. That's a very good
Touche,
point.
right?
Oh, that'd be like Michael Jordan. Who we playing tonight? Well, if you don't know
Yeah.
who he is, there's a chance nobody knows who he is. But that was hilarious.
Yeah.
Okay. So they're in Ontario, and that is their largest market along with Alberta. So you pointed out some good Canadian companies, like you said, in the last couple of weeks. So let's go to the charts. What are we seeing as far as revenue and percentage growth of the past
So,
year?
uh,
I
so
can't
put
get
it
over
into
that joke.
perspective.
That was
Yeah,
hilarious.
$11.6 million of market cap. So they're small. We know that, but the revenue was $23 million last year. So this is real.
Okay. Okay.
But again, we see a trend here. The growth has been wild. The last 12 months was 129%. The 3-year average was 173.
Wow.
So they just been clipping along, growing that revenue in the last 3 years. They got some margins here, 34.2% in margin.
Okay.
But the SG&A is still there. They're still spending. You can see why, because they have all these provinces they're in stores. So they're
Yeah.
spending on the SG&A. It's 49.1%.
Yep.
Their EBITDA is still minus 3.4 million, but we'll take a look at the cash flow in a bit, which made it an interesting story.
Okay. Levered free cash flow is showing what?
Leverage free cash flow last year in the last 12 months was $2.1 million. They've
Okay.
turned the corner
Okay.
into positive. And put that in perspective, that's 18% of their market cap in
Yeah.
1 year of free cash flow. So
Okay.
this is something that was interesting. And then we'll take a look at the balance sheet here too. We'll
Yeah.
pull up
Current
this.
cash, working capital
Yeah,
showing what?
yeah, the cash was $3.8 million with a market cap of 11.6.
Okay.
Yeah, so they're just heavy in cash. Working capital was a little bit lighter because they had some liabilities to take care of as well, 300K. But they a little bit debt heavy, 83.1% liabilities and total assets. But when you're moving into positive cash flow, that's going to start to fix itself, especially with that high revenue growth.
Ayurcann Holding, huh?
Yeah,
You found some decent companies here in the Canadian space. MTL Cannabis was another one. Was there one more? I'm trying to remember off the top of my head.
yeah, we had the group that had the partnership with Shoppers Drug Mart
Yes.
as
Yes.
well,
You
and
found
then we
some
had
good ones.
and then we had the group out in Victoria as well, or
Yes.
Vancouver. Yeah,
All about
yeah.
execution and efficiency. All right. Moment of truth. Third company. Would you own this stock?
This is interesting to diversify. They've turned positive cash flow and it's very inexpensive valuation. And it's interesting to see how much their penetration is across the country. That's very difficult to do. And they've done that, they've executed.
Yeah.
And that growth rate compared to the overall growth rate of cannabis in Canada is unbelievable.
No kidding.
Yeah.
I'd never heard of this company before, and we cover the space. Well,
Yeah.
time to reach out to them, maybe get some
Yeah.
exposure for them. But good find once again. Hey everyone, thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel, because in the end, we wouldn't be here without you. Thanks again, everyone.